Hey everyone, and welcome to today's Explainer. We are jumping right in today because we're setting the stage to uncover a massive secondary beneficiary in the AI semiconductor boom. Seriously, the numbers and the massive technological shifts we're about to look at are they're nothing short of incredible. So, let's get into it.
You know, whenever we talk about the artificial intelligence revolution, the conversation almost instantly goes to the mainstream giants, right? Companies like NVIDIA that are just constantly dominating the headlines. But if we want to truly understand the semiconductor market right now, we really have to look one layer deeper and ask ourselves this absolutely crucial question. Who is the real winner in custom AI silicon? Today, we're looking way beyond the household names to uncover the infrastructure enablers that are literally making this entire AI wave possible.
Okay, let's dive into this roadmap. We'll be looking at 1. Riding the AI wave, 2. The data center boom, 3. Financial health, 4. Broadcom versus Marvell, and finally, 5. Looking ahead to 2028.
All right, Section 1, Riding the AI Wave. It's crazy to think about, but Marvell was actually founded back in 1995, making CMOS read channels for disk drives. Well, they have undergone an explosive transition into becoming a definitive AI networking powerhouse.
And honestly, nothing tells the story of that transition quite like this staggering figure right here. $6 billion. That represents Marvell's annual data center revenue for fiscal 2026. And this isn't just a big number in a vacuum, guys. This represents a massive 46% year-over-year growth for this specific segment. It is absolutely the engine of their modern business.
Just look at how this breaks down. If you look at their Q4 fiscal 2026 revenue, a full 74% comes strictly from the data center. Communications and everything else, that makes up the remaining 26%. So the data center has just completely eclipsed their historical markets. In fact, they actually recently divested their automotive Ethernet business just so they could double down on this exact AI scale-up. It's a real game changer.
Moving on to Section 2, inside the data center boom. Let's peel back the curtain a bit and explore the specific nuts and bolts components that are actually driving all this massive market hype.
So these right here are the critical puzzle pieces for hyperscalers like Amazon and Microsoft. Marvell builds custom silicon XPUs. You can basically think of these as highly specialized brains designed for very specific AI tasks. And they use new 2-nanometer coherent DSPs and 1.6T optical modules, which, well, they essentially act as the ultra-fast fiber optic nervous system connecting all those brains together. You combine this with near-memory processing advancements and some really strategic acquisitions they've made like Celestial AI, and Marvell becomes the absolute critical enabler for hyperscale AI. Because at the end of the day, the chips simply cannot talk to each other efficiently without this exact hardware.
And the demand is just soaring. Actually, listen to this assertion from Marvell CEO Matt Murphy regarding their active electrical cables and retimers. Basically, these are the vital physical cords and signal boosters of the data center. He noted that once these areas start doubling, quote, they kind of keep doubling. Management completely expects this combined revenue to double year over year in fiscal 2027. So we're talking about moving from a roughly $200 million base straight into exponential territory.
Okay, Section 3, by the numbers, financial health. It's time to ground all of this incredible technology hype in some hard, objective financial data. Now, what's really interesting about this slide is how that explosive growth balances with the sheer realities of the balance sheet. Total revenue hit a really impressive $8.195 billion, and operating margins expanded quite nicely to 35.3%. But you have to weigh this against a pretty heavy $4.47 billion debt load. That's essentially the byproduct of their aggressive strategic acquisitions. But the silver lining here? They have robust free cash flow bringing in $463.5 million in just the fourth quarter alone. That gives them the flexibility to service that debt while they continue heavily investing in R&D.
And here is the core logic of Marvell's growth profile right now. While the overall company revenue grew a very healthy 42% year over year, the pure data center side is the true primary engine, surging ahead at 46%. Basically, every other segment is essentially sitting in the passenger seat right now, while the data center drives the car.
Which brings us to Section 4, the Broadcom versus Marvell battle. Look, if you were looking at custom AI silicon, you inevitably have to compare Marvell to its primary rival.
And what we see are two very different approaches to the exact same market. Broadcom is kind of like a massive, diversified battleship. They have huge scale, super stable software cash flows from VMware, and because of that, they offer lower price volatility. Marvell, on the other hand, is the pure-play AI speedboat. They offer higher growth optionality, mostly fueled by things like their NVIDIA partnership. But because they rely so heavily on the AI capital expenditures of just a few major hyperscalers, they carry a much higher beta, meaning they will swing a lot harder in both directions based entirely on market sentiment.
So, the crucial point we really want to make is exactly this. The Broadcom versus Marvell debate in 2026 is way less about which company wins custom AI silicon outright. The truth is, both are succeeding right now. It is entirely about which risk profile fits your specific portfolio. Institutional data and technological supremacy are great, but they only really matter when you weigh them against your own personal risk tolerance and your own investment strategy.
All right, final section. Section 5, looking ahead to 2028. Management has laid out some extremely ambitious, forward-looking guidance that we definitely need to unpack.
This timeline right here maps out Marvell's soaring trajectory. They closed out fiscal 26 at roughly $8.2 billion. Now for fiscal 27, they're guiding for over 30% growth, putting them right around $11 billion. But looking out to fiscal 28, management recently raised their revenue guidance to approximately $15 billion. That means they expect to add nearly $2 billion to their previous outlook. They are targeting close to 40% growth by 2028. It is a wildly ambitious target for sure.
So how in the world do they get there? Well, the drivers are just massive. Full-year data center revenue is forecast to grow 40% next year. Their interconnect business is now expected to grow over 50%. The custom silicon business has already reached a $1.5 billion annual run rate, and that's expected to grow more than 20%. And honestly, perhaps the most important thing for any hardware company today, COO Chris Koopmans actually confirmed on record that they have already secured the supply chain capacity needed to handle this explosive growth, not just for this year, but next year and beyond. That is huge.
Well, we've covered a massive amount of ground today, right? From electro-optical infrastructure all the way to high-beta financial comparisons. Marvell is undeniably at the absolute center of the AI data center boom. But I want to leave you with this final thought today. Knowing the incredibly aggressive upside, but also understanding the concentrated risks involved in a pure-play AI growth story, which risk profile fits your portfolio? Take what you've learned here today and see how it applies to your own strategy. Thank you so much for joining me for this explainer, and I'll catch you all next time.